All right, so this is an impromptu video that I want to knock out real quick. I'm going to treat it similar to how we did the Euro Great Britain pound trade that, by the way, is performing phenomenally. That wasn't a trade signal, but I understand how some people can be, and they'll take some of the trade ideas that I'll talk about. And that's at your discretion. This time, one of my favorite trades, and it's part of HTC Harmonic Trading Club core practices. It comes like right after trend continuation, things like that, and harmonic patterns because it involves Fibonacci. And that's the 2618 trade as you see in the title of the video. I'm going to run through this pretty quick. Talk about what I'm seeing, the probability. It's not a trade signal, not a trade setup, trade at your own discretion. Plus, the same way that we had to deal with the Euro Great Britain pound, which basically took 3 days to get to the confirmation from the time our bullish bat pattern was filled to that was Monday to Tuesday's doji to Wednesday yesterday trigger and entry confirmation closing above the doji signaling go, and then the trade, this one didn't have a pullback. Okay, this one just shot straight up to the 382, started managing the trade, and we'll see what happens on its way to the 618. But we're looking at this the same way. So now that being said, I'll tell you why and what we're looking at, and I'll just add a little bit more to it. So here is our 2618 trade. But what I do want to do real fast is I want to show you guys um, what this looks like in the classroom environment. This is actually what I'm going to show you right now. It's actually a part. This is one of the documents that I use. Hope that can be seen. Can we get closer? So this is basically what I'm going to illustrate on the charts. And the reason I like what's happening on the charts, because it allows me to go into the example perfectly. Okay, the 2618 is very powerful. What it does is it allows you to get involved in the price action that was created with a double top after it has been confirmed by a break and close beyond the previous structure that price is indeed going to reverse. The name 2618, the 2 stands for double top. The 618 stands for 618 retracement of the swing high to the swing low, the break and close, and then a 618 retracement. That's usually the PRZ, potential reversal zone, or what I would refer to as the area of interest or your entry. But you would want some type of, you would want a level of confirmation in that area. So in the example here, yes, an aggressive trader could say, yes, it's filled, I'm going. HTC is going to say, yes, it filled. Here's a doji, right, for indecision. And in the red bearish candle, my entry would have been down here at the close of this. But I understand that, and it took me time to really tighten things up. I understand aggressive traders are going to enter, but depending on the time frame, the same way I showed with the Euro Great Britain pound trade, as that liquidation process happens before the indecision process, that can hurt a trader. It could blow the account. It could send him into an extreme drawdown. He could panic. There's a lot of things that can happen during that phase. That's why it's better to wait for confirmation. And in that confirmation, even if there is a little bit of liquidation or kind of like a retest, that's where your psychology is going to kick in, and then you should be off to the races. So I wanted to show this same example on a live chart. So this is a pretty special dope video, so let's go ahead and do it real quick. So now here you see the same thing. Don't have much time, but we're going to try to knock this out. So here's that same double top that we're talking about, okay? And then here's the break and close beyond the previous structure, taking out the V-neck. Okay. And then also what I noticed is this distribution, not only was a break and close beyond previous structure, 2618 stands for double top, followed by break in previous structure, followed by 618 retracement. But what I'm trying to illustrate to you is not only did we take out the previous structure, the V-neck, it also took out the previous structure. So this one is very convincing, okay? This would be, okay, an aggressive trader would have entered and would be a little nervous right now. Remember, I'm going to use the same logic that I used for our Euro Great Britain pound trade. I don't want to go. There's a lot of things in play. I'll do a little bit of CTS in this, but I'm not willing to go until we get the same way I showed you on the worksheet that I use for my classrooms. This until I get a break and close beyond the doji. Right now, the good thing is Thursday's candle was a doji. So this, in essence, would be Friday's candle. Thursday's candle has 5 hours left. That's later on the afternoon. Right now, it's in doji. Hopefully, it stays doji. Like I got lucky on the Euro Great Britain Pound Bull Bat Tuesday doji. It was all over the place, but settled in at the end of the day, became doji. I'd be looking for the same thing here. Remember, just technical probability, and then I can get into what's possible or projections, not prediction. I'm not saying that that's going to happen. I'm saying this is where we are now with so many things fitting together. Okay, a lot of stuff. Not only that, okay, I'll get into CTS in a minute. This also gives us a chance to get involved, a second chance to get involved in a bear bat pattern on UJ. But it's been so crazy fundamentally with UJ, USD JPY. It's kind of hard to say what's going to happen, but this is a second attempt. The entry is currently sitting at the completion, the original potential reversal zone of UJ. And I did a video on it where I said this could be good because it came and filled with bullish engulfing candle, followed by doji, followed by trigger and entry. The only thing is fundamentals changed it. Japan, there was a lot of things going on with both Bank of Japan and the U.S. Fed, and this is the result of it. Just a lot of mess. But then if things are settling down, you see me talking fundamentally and technically, then that paints a different picture that you see for opportunity here. But it is all predicated off a Thursday close of that doji and then a Friday close of a candle that closes beyond it. If that is the case, I'll jump in. I'll see what's happening. The market will be closed by Friday. The first thing I'll do is come in and see how things look Sunday. I'll probably, if this all plays out, I'll probably let the market settle in, let a lot of that Sunday noise do its thing. Things probably won't look too different. And then I'll come around Tuesday, and that's kind of like where I'll make my decision. But everything will be predicated off the 2618 culminating in a 3-bar reversal. Targets, last but not least, and then we'll tie this up and get out of here. The bearish divergence was there, okay? Meaning the bearish divergence actually started here. The distribution and the pull-up are all a part of that same picture, okay? The bearish divergence is there. I'm not going to jump down to the 4-hour. I'm not going to do larger and higher. I'll do that if the 3-bar reversal comes. Like right now, that stuff is not even important. Those numbers for those CTS points will come in only when it's like time to enter. Like, what's your current score right now? Are you at an 8, a 10, a 12, a 15? Where are you at then at that point? But these are typically set up in 2 ways, okay? Fibonacci extension from the right side shoulder, swing high to swing low, and basically looking for the 127 extension for targets. We're just kind of like pre-planning, okay? So yes, we are kind of projecting and speaking out into the future on things that haven't even happened yet, but that would be the projected target if I got a break and close beyond doji for a Friday. That also is something else that is also, because this is what happens now. This is HTC logic. A to B is equal to CD combined into that 2618. So A to B, taking that, cloning it, being equal to C and D, which you see lines up perfectly with our 127 extension, where we can exit and get out. And that also would allow us to, if we wanted to, if that type of price action does come into play, then yes, you're going to see me go retracement, swing low from A to that PRZ, and give myself an even third target down here at the 618 retracement of the entire move. That's how I would play something like that. But it's really predicated off of those 2 things happening first. Thursday doji, Friday close. So I should have asked that you guys hit the like button before I even got started with this amazing video. Please tell me in the chat where else you're going to see something like this. You can learn this technique, the 2618, the same way I showed it here. You can learn this inside the Harmonic Trading Academy playlist. I do have the 2618 taught to a further degree of detail than I just did in this short video. So that is our FX Live video of the day. Subscribe to the channel if you're not subscribed. Hit the bell icon so you can be notified when who else does this on the internet. Nobody. That being said, you guys be good. Take care of yourself in the market, and I will see you on the next video.